I guess just a quick little introduction of myself. Like Dan said, my name's Ryan Hillstead. I am a CPA. I joined CORE here in 2025. After 16 years in public practice, I worked with a firm that we were located all over Saskatchewan. Got bought out by a national firm 6 years ago, or 5 years ago. So I spent 6 years as a partner with a pretty big egg clientele. This was sort of my life for 16 years, was working with egg clients and sitting at the tables with them as they went through. As we all know, being a farmer and being in the egg industry, it can sometimes feel like a bit of a roller coaster ride with big ups and big downs, but it is complex, right? Over the last even 10 to 15 years, we've seen land prices increase significantly, which, has definitely positive impacts on your wealth, your balance sheets, the capabilities that you may have to leverage or borrow money to do other things within your operation. But it's also been a little bit volatile in that we've seen some of the best prices and we've seen some of the worst prices in 20 years. We see increases in efficiencies with technology, right? Technology is just kind of taken off here, and people are utilizing that to try to be more profitable. And I think at the end of the day, Dan, so we did do a little breakout session at Convergence, and I think at the start of that, the great sort of starting point of the conversation was, why do we farm, or why do we do business? Just as a sort of overall question. And, there's lots of different reasons that are maybe financial, right? Just that's what my family did that. I've got deep roots in the farming industry. But I think ultimately as we have evolved, and not just necessarily over the last 10 to 15 years, but I mean, it's also a business, and it always has been a business, but I think we're looking at it a lot more from that business lens. And when we think about it as a business, well, what's the end goal? And the end goal generally is to build wealth. And once we have built that wealth, we want to do things that try to protect that. And we want to continue growing our wealth. And so that's sort of where I've seen egg, trending and going here over the last 15 years. The other thing that the first question was talking about transitioning your parents out, right? We have some big transition periods coming up. I can't remember the number that I saw, but something like $50 billion worth of farmland is set to be transferred here in the next decade. That's a big number, and that's a big topic. And, I definitely found, especially in the last 5 to 7 years of my career, and more so in that partner role, there was a lot of conversations around estate planning, succession planning. How can I set myself up to keep more of that money for my family? In that context, it was more based around taxes, right? And tax planning. And so that was that was my world. And I kind of had this, I'm using my hands here to show that I had this sort of narrow view of what we could do, right? And it was based on what we had available, basically from a tax planning point of view. And so what happened over the last decade that's really changed that is, unfortunately, we've had a lot of the tools that we used to have traditionally, they're not there anymore. Or there were things that were changed that made it more difficult to retain wealth, right? Not to get too accounting nerdy on everybody, there was some changes made at the start of the Trudeau sort of era that made it so that we couldn't pay dividends out to spouses, that we had to split the small income or the small business deduction limit between if we had multiple corporations going on. They brought in passive income rules. So for those guys who were in a cash land rent situation, you guys started paying more tax. Or those farmers who've, done everything right, they've saved money. Maybe they were saving money to hold for when the land came up from the neighbor or someone in the area. And so they put that money into, kind of a traditional and investment account, and that grew, and that was great. changes that were made you start having to pay more tax on that. So when we talk about being able to kind of protect our wealth, a big part of that was on the tax side of things. And so that's where sort of I've come into this conversation today to get us really thinking about what has changed, right? And sort of after all those changes happen, and maybe there's a few people on here with their accountants, they would have done what we called a surplus strip, right? Which was a complex tax plan that was there to help people who had built wealth to be able to retain some of that wealth through a tax plan. Again, that sort of, well, that in 2024, that got taken away. And so when I, say I used to look at the planning, estate planning, succession planning with my clients, and I look through this window, what I've come to realize is that there are other things outside of that window that really can be an impactful and really huge part of that planning.